What's up, everybody? My name is Jason, and welcome to Small Biz. It is Tuesday, March the 21st, 2023. And in today's video, I'm going to explain to you in very easy to understand third grade language why this banking crisis is way overblown, as was said by the real Big Short, Steve Eisman, of course, played by Steve Carell of The Office fame, and why I am one of the only ones in the entire world calling for an end to this 15 bear market and shall be proven right on or before Memorial Day weekend. All that and more coming right up. All right, we're going on week 3 of this new video podcast. And yes, it'll soon be on Apple, Spotify, and anywhere else that'll have me, but I'm having a lot of fun. Are you guys? Are you guys having any fun with the sound? It's certainly a lot better. And even though I've got a squeaky chair that needs some oil, or better yet, replaced, I'm really enjoying coming to you at least 3 or 4 times a week. And before I get started, I want to remind everybody once again, thank you so much to the almost 370 people that are supporting us with just $1 a day. And as you've already seen me do this morning, I promoted Maria Tabor, that's T-A-B-E-R. And from now on, she, along with all of our other premium members, will be in the description of every video and shared every single year to more than 160,000 now, almost 80,000 on Facebook alone, to our social media followers around the world. So if you need tax preparation, whether it's for an individual or a business, you need bookkeeping, you need foreign business accounting, I want you to reach out to Maria Tabor, who I had the pleasure of speaking to on the phone a few weeks ago. That's T-A-B-E-R. And again, her link to trysmallbiz.com is pinned in the description of this video. All right, ladies and gentlemen, as I'm coming to you right now, it is just after noon in the northern suburbs of Atlanta. It's absolutely gorgeous outside. We've got the Dow Jones Industrials up 175. S&P has added 35 points. NASDAQ is up 1.15%. But you might be sitting there, along with several thousand people in this country, wondering, gee, if the market's up for the last few days, and Jason did get it right once again, when I said we were going to bottom just north of 3,800 on the S&P, and when everyone else was bearish, I said we're going back to 4,000. Well, we're 12 points away from that right now. Might run into a bit of a buy the rumor, sell the news when the Fed announced probably a 25-point basis hike tomorrow in a Davos press conference. But the moral of the story is I've nailed this market for well over a year, but we have been taking it on the chin and perhaps getting kicked in the balls for the last 2 months with respect to our stocks. And before I tell you why this banking crisis is insanely overblown, not just way, but insanely, and why it's all by design, let me quickly address our stocks. You might notice TRKA flatlining. Getting the hang of these buttons. It's flatlining. What the hell is going on? It's pinned at 20 cents. It went from 15 to $1 back to 20. We own it at 22 and change, but it's been pinned now for about 4.5 hours. It's not moving. What the hell's going on? Well, half of our stocks, BBIG, PBLA, and of course, Hellbiz, which is in and around 12 cents a share. Did you see me give the CEO a little bit of salt in the wound? He needs it. I'll address that if I can remember. I'm going to be 53 in April on the 13th. I believe it's a Thursday, so I don't always remember what I'm supposed to do, but I will remember to stick up for your rights. I did it for Idle 2.5+ years, and yes, we're still working on getting the interest accrual removed and the damn thing forgiven, but that is most likely a next year event. They need to feel us suffer, similar to what this market has done to us, but TRKA's been flatlining. Simply put, and I like to keep it simple, stupid, whenever you have a moment like this where the market's in mode, waiting for the Fed, the bots, the machines, the high-frequency traders will take over. There's not many people in the retail space that are buying stock or taking on risk right now. And even though the averages have slowly melted up and it's on very light volume, most of the small cap stocks not only got obliterated in the past 30 to 45 days, but they're laying flat on their back. That's because people are waiting to see, is the Fed going to hike 25 points? And they probably are. Housing starts were way above expectations today. And then they're going to start to back off and get a lot more dovish in the press conference and as we head into Memorial Day and beyond. And as you've heard me say 1,000 times, follow me on Twitter at TrySmallBiz. We have been waiting for the Fed to stop raising rates. This market peaked in January of 2022. Precisely in and around the time that the Fed started to raise rates. And as the saying goes, you don't fight the Fed. Well, in the last several days, we've seen them bring a bazooka, and a mega bazooka is on the way if necessary, but not only injecting hundreds of billions of dollars into the overnight repo market, but now you've got Janet Yellen coming out there saying they're going to backstop or guarantee not only the problem banks for at least a year, but they're setting this up to guarantee all deposits, probably somewhere between $500,000 and $1 million before they introduce the digital dollar and take every ounce of privacy that you and I have away. But I'll save most of that for another day. Our stocks, when the Fed hikes and then pauses, will start to recover and it'll be fast. You'll notice the index is only up 0.5%, but half of our stocks are up 5% or more today. So when they turn the juice back on, when Jerome Powell says one and done, we need to pause to take a look around to see what's going on. We think we've got enough liquidity with respect to this overblown banking crisis, but we're not sure. So we're going to take a pause and be data dependent, which means, in my opinion, and the tips market is telling you this, it's one and done. We've got 100 basis points cut starting in September priced into this market. You have seen the peak of inflation 6 months ago. You have seen the peak of interest rates about a month or a month and a half ago. It's all downhill from here in terms of difficulty for us in the small cap space to make money. So if you have survived, like I said we were going to go through at least once or twice a year, and that's a 20 to 30% drawdown, well done. If you're not over leveraged more than 10% in per idea, then you should be buying everything except for be big across the board. Why am I not in favor of that? I do not trust the management. They're almost 10 months behind in earnings. They're obviously cooking the books or they're afraid to show their hand. It's not good, but I'm still hanging on along with BlackRock, who bought 15 million shares in and around 70 cents. Because if they ever ban TickTock and they get their fucking shit together, no, we're not banning that. Now I'm told we can say it once, as long as it's not in the first minute or so of the video, then we got something with BBIG. But TRKA, again, it's been sitting at 20.03 for 5 hours. The high frequency traders, the bots have got it pinned. They're accumulating. I can promise you this. Again, it went from 15 to $1 back to 20. A massive, violent move is coming. If you're a Debbie Downer, and we got plenty of those, you think it's going back to 15, full round trip, nothing to see here. It's going to pull an MULN, which diluted the hell out of the stock, along with HLBZ, and yeah, I'll get to him in a second. So this is a treacherous environment. But with chaos comes opportunity. We made a fortune last year while most people got creamed in the worst bear market, the first 6 months anyway, since 1970. We, along with everybody else, have taken it, on the nose here, trying to keep it clean. I hear you, Ma. We didn't say kick him in the balls. Yeah, I just said it. Rude and crude. Jason's being rude and crude. That was her favorite word. If you're new, welcome. We don't edit around here. I often refer to my mother, who's in heaven, along with my father. Whenever I got too nasty when I was on Wall Street, when every other word was... She hated it. So I'm trying not to be rude and crude, but I am trying to get us off our back and back in the game. But you guys might notice, and yes, I'm getting to the banking crisis. I went after Sal, the CEO of Hellbiz, because he, along with MULN and TRKA, who tripled the float on the QT, they didn't do a filing. There was a warrant conversion on TRKA's case, and they didn't tell the street. At least they didn't do so in real time. So a lot of these CEOs, including Sal, are not always upfront. in terms of the truth. I'm not going to sit here and call him a flat out effing liar, although he may be, because when the stock went from 12 cents where it is now to 55 when I told you guys to get out, we made a lot of money on the way up. We bought it back, average around 13. He tripled the float. So did Mullen. I think Mullen's close to a quadruple. Tripled on TRKA. Whether these guys saw the banking collapse coming, whether they desperately need the money or they're just greedy as hell, or how about this? All the above? I don't know. But I'm going to stick my head in the guillotine at the risk of being blocked by Sal. And if he does, that's the end of our relationship with that guy. But I will say, I do appreciate his willingness to roll up his sleeves and at least talk to the retail investor. XELA, where we're down 30%, par, the name of the CEO who doesn't own any stock that he paid for on his own. He's got that million shares of convertible preferred just so he can reverse the stock without our approval. And I still believe it's got a shot, as it's done multiple times, to go north of 8 cents a share. But we're not dealing with Campbell's Soup. This is not AT&T. It's not Coca-Cola. This is your Vegas money. Most of you should not have more than 20% of your entire portfolio in these small cap stocks, but I am not going to be, as I transition to the banking crisis, which is way overblown, just a penny stock guy. So as we get liquid, hopefully when we sell some of this stuff for winners, we're going to start to incorporate many of the stocks that I recommended in December. Meta, which is Facebook, of course, Tesla, Carvana said sell it at 19. Last I looked, it was around 7. I gave you bank stocks, WAL, FRC, which I said sell the latter at 50. It bottomed out at 12. It's up at 18 and change because Janet Yellen and the Fed is indicating, along with Jamie Dimon, that they're willing to make a stand with FRC and put an end to the banking crisis, which if you watched 8 minutes into it, 10 minutes into it, Steve Eisman, again, played by Steve Carell in The Big Short. Watch the movie. That was 2008. That was a real crisis. That was strippers, referencing the movie, of course, that owned 5 homes without any credit check. It didn't matter what your score was. Didn't matter what your income or your liquidity was. If you looked nice and you had a crooked mortgage banker that was willing to roll the dice back in 2006 and 7, you were in. This in a nutshell, and if you watch that video by Steve Eisman, who again is the real guy that was played by Carell in the movie, this is 3 of 4 banks in California, in crazy Nancy Pelosi's district of San Francisco, that grew exponentially over the last 5 years as a result of the expansion in Silicon Valley. SIVB, as one example, I think I saw their assets under management went up 5-fold since 2018. So they had what's called excess cash reserves, and they stuck it in treasuries. Most of it in long duration, where there's duration risk, 20, 30-year bonds, which is supposed to be AAA. Well, the problem is, based on inexperience and where the hell was the Fed? Maybe they were actually allowing this to happen. Let's crash the banking system. Let's get all the assets, or the 80% of it, in the hands of JP Morgan, Bank of America, Citigroup, all of which are run by far left loons like Jamie Dimon, who I actually think knows his stuff. Right in front of the transition in the next few years to the digital dollar, which is going to have a serial number to track every ounce of spending in these smart cities that you're starting to read about, where you can walk or tracked, be traced, videotaped, etc. in 15 minutes or less. Folks, we are entering a massively transitional period. And while it is true that these smart cities and the digital dollar is going to rob you in many cases of your privacy, there is going to be a bit of a Shangri-La feel. We're about to have flying cars and trips to Mars. You want to know why I'm so bullish? There are babies that are being born today that are going to live to be 200 years old. They have cracked the human genome. If you pay attention to DeepMind, and what Elon Musk is doing over at Neuralink, they're literally going to get quadriplegics up out of the chair. They're literally going to be able to rewire your DNA, because DNA is nothing more than energy and information. and in real time, without any incisions in the next 10 years, if not sooner, eliminate the cancer. Clean out the artery. No incision required. It'll be nanotechnology, tiny little bots that keep an eye on everything that's going on, including where you're spending your money and where you're going. So there's going to be offsets like anything else. 3-day work weeks, you're already seeing them go to 4. Google's talking about 3. The machines are going to take over, but we're going to have a problem with unemployment at some point in the next 5 or 10 years. But between now and 2027 and 8, a time or the middle of a decade when the markets are very strong, especially after a 15-month bear, which is actually longer than 80% of all bear markets if you know your history. The average bear market is 9.6 months. Yeah, I know I'm all over the place, but I love what I do. I'm helping you guys make money in the stock market and get a premium membership at trysmallbiz.com. This lull, this kick in the balls that we're now going through is temporary. This too shall pass. We are about to enter a 3 to 5 year period where the Fed's out of the way. They're about to make their last rate hike, in my opinion, most likely for the rest of the decade. We were at 0 for 10 years. We are going to drift down with their help, along with market forces, to somewhere in the middle, 2.5% to 3%. And the easy money is still going to be there. So I hate to tell all the bears, including the Elliott waiver that I shared, who says we're about to enter a 20-year bear market. Wrong. Longest bear market in history. 929 days. We're not going sideways or down for 20 effing years. We may chop around for the next 6 to 12 months, maybe even a little bit longer, but all we need as traders is to get this market to stop going down. So in terms of the banking crisis, if you're still with me, and most are not, they grew exponentially. They put all this money of excess reserves in treasuries. Rates went from 0 to 5. The value of that bond portfolio crashed, and you got startups not only trying to meet payroll, but stay in business. And then you've got cell phones that triggered a run on multiple banks, again, mostly in California, including the other one in New York, which was tied to crypto. And by the way, Ethereum and all the other altcoins are not rallying like Bitcoin, which I've also nailed. It's overbought at 28. Don't be surprised if you revisit the last breakout around 24.5, 25, if we get a buy the rumor, sell the news from the Fed. But most of the other altcoins, in my opinion, are going to 0. Bitcoin is for real. 21 million coins, can't print anymore. As we continue to have problems like this, even though I believe it's manufactured and way overblown, Bitcoin on pullbacks, like I said, at 16 and change, is a buy. But this is a manufactured crisis of epic proportions. If you guys honestly think, in closing, that they had no idea that raising rates from 0 to 5% was going to cause a problem, you're living under a rock. They knew damn well what was going to happen. In fact, there was multiple communications with the risk manager at SIVB and members of the Fed and the SEC 18 months, if not sooner, before the collapse. And some, it's coming out in the news today, warned them that it was a problem. But then suddenly the woman who was the risk manager leaves and she gets paid $7 million to apparently go away. You don't think this is by design? You don't think they want to push most of the money so that the rich can get richer and get it in the hands of all the liberal fat cats at far left banks like Citigroup, JP Morgan, etc.? This is not your local community bank in Arkansas that's got a problem. This is far left Silicon Valley banks who had all their assets in one demographic that I believe was allowed to fester for years. And they knew damn well they were going to backstop not only SVB Bank, but everyone else because they need the public's cooperation in order to take away your freedom. When they introduce the digital dollar in the next several years, and you have every eyeball you could have possibly imagined on every single dollar you spend, where and when to the T, they need to give you something. How about peace of mind? It's not just going to be $250,000. They may go to 10 million or more, which is going to cover 99.9% of all depositors. They're going to give you the warm and fuzzy. They're going to bend you over this desk without any lube, and then here it comes in the next few years when they suck up 40% of all US dollars that were printed during the pandemic, which is true, and they say you can no longer have paper dollars. You go ahead and give it to Jerome Powell, who will turn around and give it to the Rothschild, the Rockefeller, the bloodlines that are actually running the show. Folks, this is a bullshit, cooked up scam. Just like the pandemic, just like virtually every other, boy, the stink meter's really going off episode that most of us have lived through. This is by design. This is a transfer of wealth into the hands of half a dozen banks. And just like they screwed small business owners during the pandemic, they are intentionally screwing regional banks. When have you seen Biden or anybody in his cabinet, including Janet Yellen, get on TV and say, don't take your money out of the regionals? You haven't heard it a single time, and you won't. They'll tell everybody, settle down. There's nothing to worry about. You're going to be covered. Insured rates are going to go up. The amount of money that you're going to make in your money market in terms of returns is going to go up. But you will not hear any of them stand up for real and defend the smaller regional banks because they're trying to destroy them. But what the fuck do I know? I'm just some podcaster who's got a thing for Newman's medium roast organic coffee and collagen chocolate, dark chocolate peptides that I get from Amazon. Bit of a strange ending, I know, but always remember, I love you guys, and I thank you so much for watching.